Tradespotting splendiferously skewed market roundup, tariffs, tech, and Trump's twister of topsy-turvy too. Oh dearest viewer, fasten thine seatbelts and duct tape thine portfolio, for we're diving, snout first, into a bubbling fondue pot of fiscal fumbles and silicon saviors, stirred to delirium by none other than the Orange Oracle himself, President Trump. He spent the weekend treating international trade policy as a toddler treats spaghetti, enthusiastic, sticky, all over the walls. Apple rising like a baked Alaska in a sauna. You see it in the background, leading the charge. Apple climbing 2.21%, though it was up nearly 6% at one point, as if Sir Isaac Newton himself had reversed gravity in honour of Tim Cook's turtleneck diplomacy with Trump. Investors rejoicing like monks discovering a new kind of cheese or tonic wine after US Customs and Border Protection issued a surprise love letter in bureaucratese. No tariffs for your gadgets for now, quote unquote. This, my friends, is a geopolitical earthquake, the equivalent of someone saying I love you while holding a divorced lawyer's number behind their back. 340 billion worth of techie trinkets, including smartphones, GPUs, servers, and possibly Elon Musk's sense of subtlety. We covered the move on Apple in the Discord, in community, all granted a temporary break from the impending doom of reciprocal tariffs. China, bless its exporting little heart, scored $100 billion of exemptions, roughly equivalent to the GDP of a medium-sized European dream. NVDA jumped and then sat down like a dog that heard a thunderclap, soaring 3%. Not on my list here, like Caffeinated Eagle. We'll skip straight to Google, where it should have been Caffeinated Eagle, not quite on Google, 1.23. But you know, despite this, edging up that 1% and smugly basking in the mild euphoria of a man who's just been told his cholesterol is high to normal, we can't yet say that the worst is over, because this, my friends, is a lower low and this is a divergent high. It's also a failure swing, and price action in those scenarios typically comes down and tests long-term support. The diagonal on the trend line in that most recent move has been broken, in which case perhaps you're looking at the extent of this retracement, and so far you can see the come down tested prior level of support will be 50% in at a 133. So that's definitely possible. Post-market has lost a little bit off the lid, and it could easily slip back down again, friends. If you're looking for resistance on this move, say you're back above a 236 and the 50% retracement here also comes in at a crucial level. So anywhere between 168 and 172, the risk is on again. So Wedbush, they're all into this. Also IBKR, I've noticed they're analysts too. They all speak of optimism that could power a small village. I don't think that we really can get too carried away, and although others would like to declare this weekend's policy pirouette as a net win for techs, I can't say that we're seeing anything dizzying in price. The flexibility in the markets is more volatility in the pants. Same sentence, the same breath as this industrial level optimism. I would put across that nobody has a clue what's going on, though a lot of those people are wearing expensive suits and extremely unfashionable necktie. So if you're worried about Trump's tariffs or Schrödinger, well, you're in good company. Trump himself has spent the weekend not just playing with spaghetti, but also time traveling between policy positions, with all the consistency of Lord Pigeon on the Red Bull. Hey, mate! One moment he's pausing the tariffs, like some sort of considerate DJ holding the drop. Then next, he's ramping them up 145% on China with the subtlety of a cannonball in a koi pond. On that note, have you seen USDJPY? Something is up, and it's not Air Force One, the airborne cousin of a mood swing. We saw Trump in the bathroom on that flying toilet again, offering a reprieve on semiconductors and chips. This is not going to last forever, folks. Much like that phrase, we'll see, when you've had a long chat with the girlfriend. Semiconductors, beware. You guys are next. Trump has you in the crosshairs, and he's eyeing you like the biscuit jar. There's also a little bit of a summer breeze coming through Europe at the FUSI, feeling fine, financially frisky and fancy free. That's across the pond. FUSI up 2.2%. We would have to describe it as a victory. European markets themselves followed suit. There's the Germans. They've been doing well. And that reaction, let's zoom in, get the flags out the way, and that pointy guy. And you can see that there's a very similar picture across these charts. Pay attention. I'll talk about that pattern in a minute. There is a synchronicity of enthusiasm, though. The Euro flash mob are out in force. 2.8% at one stage. There's 2.85 on the close in Germany. France, not with it as strong a recovery. Still managing to close the gap and at resistance. Strutted up 2.5%, closing at 237. And pan-European stocks, there they are, those beautiful babies, rallying 2.8% as my battery dies. All of them dancing like they've just dodged a bullet. Even Logitech, the humble Swiss manufacturer of mice and magical clicky bits, slept nearly 10%. Logitech. That should be enough. Nope, he's got his letters wrong. Logitech. Very close there. Very, very close. Logi will do the business. Yes, so Logi, there you go. 2.51%. That's not Logi amazing. That's not as Logi hell. What are we at? On the 4-hour time frame, you can see that it's very positive. A little bit of a gap's done well. A lot of a gap to the top side could push a lot further in there. So it has done well over the piece, closing out in at around 2.51%, but from the previous close to the high of the day, 6.42%. Nothing to argue with there on the provider of premium plastic, proving once again that the only thing more powerful than love is a good peripheral. Back in the States now, back in the States. In the US of A, there's the NASDAQ, and you see it also not yet closed the gap. Should it do so, go on to Rocky Outcrop Flash, giving you an awful lot to look to target on the top side. S&P 500 closing the day at 0.79, having pushed higher, nearly up similar amounts to those single ticker charts we just looked at. Everything in America is blissfully unsure about whether the economy is about to be punished or rewarded with these policy gymnastics, reacting to the chaos not with panic, but with the gleeful optimism you'd find from somebody who just worked out that their parachute here, that they thought was completely broken at this stage, has shown signs of being potentially functional. But they're still falling at speed, and other things are heading towards them on the way down. We'll talk about that further in the week. $2 trillion lost in value. Faster than you could say. Magnificent misfire from those beautiful 7 tech stocks. Bouncing back. All the resilience of a rubber duck in a bathtub to the top side. So trust no one. That's the main takeaway from Trump's efforts at economic trauma bonding. That the only way you can handle a narcissistic personality like that is by not answering the phone, not texting them back and going full no contact. So you got that? That's your instructions with regards to the current political flexible gymnastics. Where do we stand? Somewhere between a hot mess and a tepid miracle. This tech sector is being seduced and scolded in the same breath. There's a lot to do to break that downward sloping trend line on the daily time frame. Trump is lifting tariffs and planning their return. He's like a magician who can't remember where he hid the rabbit or what comes next. Investors dancing like it's 1999, and we've just heard that Y2K has been cancelled. Whoa, I remember those days. The moral of the story, buy Apple and sell Logic. Maybe not the stock, but just the concept itself. Keep your eye on Trump's Twitter or Truth Social, because who knows what's coming first in the world of geopolitics and gadgets. It's not the chips on your motherboard you really have to worry about. It's the one on the shoulder of El Presidente. I've been Tradespotting, and I would sign off, but I've got this excellent tip to talk about on LivePerson. Downward sloping diagonal on the weekly time frame there. Price action touched it once, twice, 3 times the lady, and this broadening formation to the bottom. Price action probably coming in, putting in these lows. As you can see, you've got bullish divergence. That's reversal divergence on this most recent low. It's also macro divergent across the piece. If the RSI bounces here from the top side of the bearish control zone, recovers the 50 simple, and does it convincingly, having put in divergence between these two lows and pushed its head above it recently, then that could be conquering a 50 simple. The next target is 236 at 150. You break that, the next target is a golden pocket in a 200 period moving average, and that's at $13. Sounds crazy, is little. Down to the 4-hour time frame, zoom in, you can see a rocket outcrop flash. It's up at that beautiful target of 2.8, perhaps more reasonable for some of those tepid little chicken littles that like to watch along and not hit the like button. If you're dancing like it's 1999, know I'm out there with a saucepan ready to bosh you across the face if you don't hit that like button. Because we've got serious work on the go here. We're not just messing around. The tariff tango and the tech takedown from the Orange Oracle is all well and good, but in recent years, retail investors have shaken the foundations of Wall Street. I was there with many of you from the very beginning of GameStop, AMC, even Tesla. The power of the individual investor has never been more evident than it has been on this channel, in this community, and on the Rocky Outcrop Discord. Trades cause ripples, but it's the vote that causes the waves. So welcome to the show, and if you haven't hit that like button, now's the time, because we're going to dive deep into the tactics the company used to sideline retail investors and how you can reclaim your rightful place at the table. Let's start with a little look at GameStop. Here it is, pushing into that important level, testing that 200 period moving average, and recovered that 50 simple, having put in the bullish reversal divergence and made the move that I just explained on LivePerson. Now, this stock, GME, it includes a community of retail investors who you'll know, you don't need to watch the documentaries because you were there, and the people that do make documentaries, like that one about it being a cult, the only people they interviewed, if you've noticed, were all people who began their journey as a member of the chat box here on this channel. So you can assume yourself to be among very privileged people. Hedge funds lost billions, but despite the impact that you had on the market, our influence over corporate decisions remained minimal, if at all existing. At its peak, GameStop's stock hit over $400. Clearly that's very different now with all of the dilutions that have hit. For 120 is the high there currently. A lot of change there with regards to the outstanding number of shares. Why did this all happen? Trading can be a distraction for the powerful. They don't fear your trade. They fear your impact on their corporate decisions. They fear your vote. Let's talk AMC. A nightmare for some, called well here on the show. You can see we've done an awful lot of work, and look at that incredible downtrend. Really harmful. And aren't you now glad when you're talking about LivePerson? It's in around the lows that you would see on this chart at the bottom of those trends. Retail investors poured into this thing, hoping to save the company from bankruptcy. They supported the stock, they rallied, and yet they caused another market frenzy here, but they couldn't influence the company, not even slightly. Adam Aaron making incredibly bad decisions there. AMC, a real spectacle. But the voting power, it wasn't in retail's hands. Despite all the attention, AMC's fate was not determined by retail traders who believed in it. It was, again, still in the hands of a very small group of powerful people. Now, there has been successes for retail traders. For example, in Tesla, clearly in a different situation right now. 250 post-market, 252 at the close, having put in significantly strong moves. And this is the weekly time frame where you can see in great detail how much of an impact the retail traders have had following that trend to the top side. But what with regards to the impact on corporate decisions? Their story of success is more about customer loyalty than the power of the retail vote, which is an important note to remember. Now, retail investors often feel like they're cheering from the sidelines and not calling the plays, and that's more pronounced when corporate countermeasures are enacted against retail taking control. How do companies fight when retail movements gain traction over the board? Well, they've got a few tricks up their sleeve to make sure their control remains intact. First off, let's go back to the LPSN chart. Now, there's a couple of important things to note in LivePerson here. One of them is the story of the company since this peak. Another is the news story that we're bringing to the markets. Let's talk about proxy voting. Shareholders technically have the right to vote on major corporate decisions, but here's the problem. It's been made complicated. Long documents, technical jargon, tight deadlines, it's all made to confuse and discourage retail investors from getting involved. It's never been about giving you a voice, it's about making sure you don't use your voice, and that's what we're here to change. Next, there's strategic dilution. Companies can issue new shares, like GameStop started getting a bit of addicted to, and AMC has it right into its mainlined into its veins, effectively diluting shareholders' votes. So even if you had a significant portion of the stock, your ability to influence it is weakened. That is not the case in LivePerson. More shares often equals less control. In LivePerson, you're getting powerful positions, and you can then have a powerful strategy which will counter that of those companies who would ensure that the balance of power stays with institutions. Here we've got an opportunity that we've created for ourselves based on our own experiences. There's the media narrative, those who would control the story and try and make companies undermine retail movements, painting us as mobs or spectators instead of empowered investors. And in this example, we've already taken this thing back from delisting potential back up to over $2. What do you think is going to happen now that we've locked the float? We're not the mob. We're not speculators. We are those empowered investors. You control the narrative. We are the public perception. That's all it takes. Us to fight back and undermine those arguments and efforts against us. And if that doesn't work, if all else fails, companies often turn to legal action. They threaten lawsuits or anything else that might intimidate or silence dissenting voices. That is not the case in LivePerson, where you've got a world-class CEO engaging very well with every stakeholder in the business. So let's flip the script. It doesn't have to be that way. I'm telling you now that your ownership of shares doesn't just give you a stake in the company. It gives you a vote, a powerful, actionable vote that can reshape this chart. If you and me, we, the retail investors, understand that we can take back what's rightfully ours, and we know how to do it while staying classy, then all we need is the right ticker. We found it, and we created the most fertile, perfect ground for anyone who wants to join this movement. We're taking back what's rightfully ours. At LivePerson, with this ticker, we're taking action. We're organizing shareholders. We've got extremely transparent communication, and we make our efforts and our objectives known to the board. We are using strategic voting, and we're showing that retail investors can change the course of a company. This isn't just about one company. This is about creating a blueprint for how others can follow after. Retail investors like you, acting in unity, have the potential to challenge even the most entrenched corporate systems. And while it might not be possible on AMC or GameStop, there is nothing stopping you here. It's your turn. It's time to stop being a passive investor. It's time to become active. You're already informed and you know how to get organized. Together we can democratize corporate governance. We can create a system where our votes really matter in an arena that really makes a difference. So join me in this movement. Let's change the world of investing, and let's show corporations all over the world that we're no longer just traders. We're voters and we make the difference. Join the movement. Together, we can make every vote count. I've been Tradespotting. This is your topsy-turvy market update and your helpful hand up. Help me back, and together we'll change the world.